Hi traders, we just finished the worst ever 5-day year opening in Wall Street history. The S&P 500 finished down 5.9%. Last week I anticipated the red opening for 2016, but I was really surprised to see how really strong it was. Now the trigger was a Chinese market crash down, but the real reason in fact is the fact that we're trending up for the last 6 years. So we're seeing a huge rally over the last 6 years and the pullback was due. Now what's next? Well, currently fear dominates the market. We're seeing the market dropping down, and I believe that we're going to continue seeing the momentum driving the market even lower than that. Now we are moving into the quarterly earnings period, and the estimation of the analyst is not good, so I don't see how that is going to save the market. The analysts are estimating a drop of 4.2% in company profits. So again, I'm anticipating a continuation of what we've seen last week. Let's take a technical look at the market. If I take a technical look at the S&P 500, I can see that we reached the point of 1950, which I anticipated that we'll get to last week. However, my next target will be right now the lows of August, which is at around the 1800s. So technically, the market is moving down, and again with quite a bit of momentum. Let's take a look at the broader picture. If I take a look at the monthly picture of the S&P 500, then I can see the crash down in 2000, 2008, and 2015 year end, the high in 2015. Just last week, when we took a look at the same chart, it didn't look like there's a good chance for a pullback. But right now, as you can see, the pullback is and may take us all the way down to the 1600 area. So we just started the pullback, and I think we're going to see it continuing into 2016. Let's take a look at the two stocks that we picked last week. We picked two swing trades last week. The first one was ITC, and I have to tell you that it's one of the only one that really moved up during last week in Wall Street. So ITC for long did almost 3%. 3% is usually my target, my first swing target. It did not reach it. It was just shy of 3%. It is pulling back down. I think it still looks good for a long. The second pick last week was Netflix. Netflix did great. It went down 8%. Netflix was my pick for a short. However, Netflix gapped down, so it gave me no opportunity to get into this trade. So Netflix is out of the picture for me. Let's pick two stocks for next week. My first pick for the week is CPN. CPN is a natural gas plant producer in the US, 88 plants in the States. Now it's looking great for long. Just watch this very nice bull flag, and you can take a good look at the volume of Friday, and you can see that the volume is rising. So something is good going on there. It didn't pull back with the whole market last week, so it looks good for a long. CPN is my pick over $14.70. My second pick for the week is Amazon short. Now Amazon moved up more than 100% last year, and I believe Amazon is due for a pullback. So I'm going to be shorting Amazon under 605 in case it moves under 605. Now all of these picks are managed by the 3x3 method, which means that at the 3% target, I will take 3/4 of a partial, which means I'm going to be keeping just 1/4 for some continuation. And my stop for every of my picks is just 3%. I will never lose more than 3% on any of my swing trades. I wish you a great week and see you next week.